All right, what is going on YouTube? It is Evan Trades. Welcome back to another video. And for you guys, I'm going to be bringing you a video about and explain to you guys what made me a consistent trader. That's one simple step that I changed, right? Because I was losing a significant amount. My losses, I was taking a lot of losses, and they were pretty big losses. Well, no, I had decent risk, but I was just losing way too much. They would overtake my wins, and I had to find something to change. I had to change something in my trading, my entry, something. So I sat back, I sat down, I put my head down, and I tried to figure out what the problem was. And what I found out, the one thing that helped me, the one very simple step, and I've mentioned it before. I've mentioned it before, but I'm going to mention it again because it's very powerful. The one thing that helped me become very consistent, that's made me only lose 3 trades in the past month and a half, is only trading within macros. And you guys might be like, oh, he's talking about this again. Well, this is what it takes to implement it in your guys' heads. Is this needs to be your bread and butter. This needs to be, look, if your trading style doesn't require this, if you don't prefer it, that's fine, It's whatever's going to make you consistent, but this is what made me the consistent trader that I am. That made me see results, that really flipped the script for me. So only trading within the macro times, and I'm going to go in depth with that. I mean, it's as simple as it gets. I only enter during the macros, and I'm going to show a couple examples for you guys as well, so you guys understand why and what it looks like during a macro compared to the rest of the times throughout the market session, and the precision of macros as well. So Friday we were bouncing off this, blah blah blah. 4 hour for value gap, wicked up, the sell side swept. There was an SMT right here with ES, looking very, very bullish. Strong wick up, right? We have our internal high right here. That would be our target. Okay, and then we're starting, if we zoom in a little more, right around market open, we're respecting this 4 hour and waking up. So Friday, if you traded, I'm assuming you would have been bullish, right? So zooming in, okay, we zoom in again. This is the 4 hour. Okay, we have sell side swept again. Get a big wake up. Let's do right before market. Okay, and this would be our intraday high right here that we're targeting for the AM session or intraday. So I believe there was an SMT right here as well. So that's even more of a confluence to be bullish. But anyways, that's not the point. So as you can see right here, we have the overnight. I'll turn on my search and story profile. So we have Asia, right? Okay, London messed around a little bit, came down, retraced back into this 4 hour, right? And as soon as New York session opened at 8:30, we took the sell side, manipulated the lows with an SMT, and then 9:30 opens, we shoot right back up. And the macro that I love to trade is the 950 to 1010 macro. So we're going to mark that out because I'm going to show you guys something. And it's going to blow you guys away. All right, so we traded down one more time, right at open, took this internal low. So, all right, then we completely inverted this for value gap. Okay, make it an IFEG. Okay, now it's about to hit 950. The macro is about to open, so let's zoom into the 1 minute right here. Okay, so here's 950, here's the end of the macro at 1010, right? So this is the area right here within this time window is the only time window, only time I am looking for an entry. Why? Because in macros, the best opportunity, if you have notes, write this down. The best opportunities happen in a macro. Doesn't matter what macro. It could be the AM macro that I trade. It could be the PM. It can be the lunch hour macro. It can be end of day macro. It doesn't matter. They're macros, right? Price is highly likely to go to its predestined drawn liquidity a lot faster with a lot more volatility within these time slots. If anyone's ever heard of ICT's silver bullet, I don't know exactly if his son trades it or not, but his silver bullet is solely a macro that happens within the macro. A sweep of liquidity and a fair value gap. That's the silver bullet only within that time window. So write this down if you can. The best opportunities happen in a macro because price is more volatile and highly likely to go to its predestined drawn liquidity faster. And one more thing, and the best setups will appear, right? Oh, that looks ugly. Let me change that real quick. Okay, right? The best opportunities happen in a macro because price is more volatile and highly likely to go to its predestined drawn liquidity faster. The best setups will appear, right? To be honest, I don't know why the market has these time windows. I simply one of ICT's teachings. But what I do know is it works. It works, and I've backtested it so many times, and even through my trades, trading it live, it works 100%. I've been in 50, 40 point trades on NQ that have hit my take profit within 2 candles, 3 candles because of the macros. That's a lot of volatility and a lot of speed. So going back to the trade, make sure you write this guy down, write it however way you like. I'm gonna take it off. So we have our draw liquidity up here, time window, macro. Our setup is already pretty much happened. Sell side sweat, manipulation, displacement, right? And then we have a change of the state of delivery on the 5-minute. So this is pretty good. This is a pretty good setup, right? To look for, right? Trace back in this inverse. Boom, macro starts. Instantly retrace back up. And look at that. Right at the end of the macro, price hits the drawn liquidity, the target. This whole time slot, this whole window time slot, price just went to the predestined drawn liquidity super fast. Super fast. It's right here. It's right in front of you. And if you backtest this, you'll see a lot of price action just like this. Now, there wasn't a setup for me that I like to take. I don't usually take IFVGs. I'm not really comfortable taking them, so I don't take them. I'm not going to take something I'm not comfortable with, but as you guys can see, as soon as the macro starts, you cannot tell me price is not algorithmic. As soon as the macro opens, we shoot right back up and we don't look back and we go towards the drawn liquidity. It's amazing. And so let's see how far it goes. And we just keep on going. And then we start to dump off a little bit. But this whole macro, we just went right up. I'm going to show you guys another example too. All right. Now this was Wednesday, November 24th, the day before Thanksgiving. Did I trade this day? No, I did not. Wait, did I? No, I did not. Uh, no, I didn't. I only traded Tuesday. Anyways, I was backtesting this, the days that I missed. I confident I would have been bearish. We had a very bearish setup. We had a SMT at the highs. We were traced back in this daily. We were rejecting manipulation, displacement. We were respecting this 4-hour for value gap from the overnight right before New York, and we dumped right at New York Open, and I was confident that we were going to go for this Monday low. So zooming in again, 15-minute, right? We're just dumping, completely dumping, right? Targeting this low, so our intraday draw. So keep in mind, this is our draw on liquidity. We are bearish. This is our draw on liquidity. Okay, 15-minute, all right. So the macro is from 950 to 1010. That is when we are looking for entries. So I'm gonna remind you guys what my setup is again. It's basically just the 2022 model from ICT, market maker models, retracement to a higher time frame PD array, sell side or buy side sweat, manipulation, displacement, and then respectment, or I don't know if that's even a word, respectment. I don't know. A fair value gap or some PD array getting respected to show that we are holding the order flow. So we have a 5-minute fair value gap right here. I think I remember this because I sat here. I didn't take a trade, but I'll look over it again. So we retrace 10 minutes before the macro starts. We retrace into the 5-minute fair value gap. Okay, so it's starting to look really nice. And I know if we're bearish, we will hold this going into the macro and we will dump. We will dump. So zooming into the 1 minute to look for entries. Okay, it's a little choppy. Haven't entered the macro yet. We have this little internal high waiting. Okay, I want to zoom into the 15-second to see the action in there. Okay, as we can see, we have our low below here. Okay, let's let the action play out. Macro has officially started. So we have buy side swept. I can't remember if there is an SMT here or not. I'm pretty sure there was. Someone can please correct me on this. If I'm wrong, go right ahead. Pretty sure there was an SMT right there. So what I was looking for was complete buy side swept manipulation. Now I just need displacement, change of the state of delivery, or like a strong something to price to tell me that we are bearish, that we want to continue lower. So macro has opened, right? So if you're on the 1 minute, when you look for an entry, if we get a candle closure below this candle high, this would be a change of the state of delivery. All right, boom. 1 minute into the macro. 1 minute into the macro. Volatile move down. Targeting towards this internal low. You can enter here. Targeting this low. Maybe if you don't want as big of a stop loss, put at this internal high. It's up to you. Depends what type of trader you are. Anyways, we get a volatile move down right at open. take these lines out of the way because they are ugly. Here's the end of market, the macro, and we are targeting this external sell side level, right? So keep in mind we are in a macro. Look how fast, put it above this high just to keep it safe. Look how fast price goes to its target. Boom. Okay. Yes, it didn't go straight down within 10 minutes because it's a 100-point move. It's very possible. But if you look within this time period, after the change of the state of delivery, if you were to enter right there, you would not go into drawdown once. Maybe a little bit right here, a few points right here, but that's it. And you see how just it has this big dump off right here? You have to recognize those days and when to take advantage of those, especially in a macro. And it sucks, you know, when I didn't take a trade and I knew we were going to go to this level, it sucks, you know. We sold off, but that's when FOMO comes into play, and that's when being a disciplined trader is a must. So we dump straight to the sell side level, and notice right here at 950 we get that push down immediately, creating that change in the state of delivery. What does that mean? That means there's a change in order flow, order direction, you know, from bullish to bearish. That changes the state right there. And this after 950 we just dump off. So it's crucial for you guys to understand this, and I want you guys to back test this, please. I really want you guys to back test this. Go throughout even the days just when you are trading. Take a couple days, sit there, and just watch the macro play out. Pick a level where you think price is going, and just watch it play out. And the more you see it, the more confident you will be. Trading is all about confidence. You need confidence in this game to succeed. Without confidence, you're just a soulless gambler out there blowing money. So, like I said, back test this, write notes on it. What do you see? What's more comfortable with you? What type of trading style do you have? And remind yourself, it sucks only having to trade within those time windows. But you have to understand, that's when the best opportunity is going to happen. Why trade? Here's how I think about it from a common sense mind. As a trader, you want to take the best trades or the setups, right? Because it's what's going to make you money. It's what you're confident with. So why wouldn't you take the best setups as a trader and the best opportunity? So you have to be disciplined. But anyways, thank you guys for listening to me yap. Please, please take notes. Back test. Back test, back test, back test, because this will change your trading like it changed mine. Get your model. Get your model down and align it with time first and then your model. Like ICT always says, time and price. So let me know what you guys think in the comments. If you guys have any questions, be free to let me know down in the comment section or reach out to me on X. I'll make sure to put it in the description for you guys. Make sure to follow me on there. My X is Evan_ICT capitalized. And I'll answer any questions for you guys. Thank you guys for the support. We're slowly rising and grinding in subscribers, and I can't wait to grow with you guys. So thank you so much. All right, I will see you guys in the next one. Peace out.